I'm Vanessa Rez. I'm with Evergreen Home Loans. I'm a loan officer in the greater Portland area. Working with the lender earlier, it really helps you figure out your payment, how much cash you need to bring, and so that you can determine which program would be right for your goals. So VA is for veteran who has entitlement for the VA loan, and we can do 100% financing, so we can finance the home, the site prep, the land, all in one loan, and there's no required down. However, there are closing costs, and those closing costs can be covered by the retailer in most cases. Yeah, it's a great program. It's a program where you can bring in less money, so 3.5% of your total amount of the total acquisition cost. FHA also has mortgage insurance on the loan. The benefit of the FHA loan is that you can have lower credit scores, so maybe like a 620 credit score, maybe 615, depending on the other compensating factors of your file. You can have lower credit scores, and you can have a recent bankruptcy, so shorter seasoning times for bankruptcy, and the interest rate is a little bit lower than a conforming loan. However, there's mortgage insurance on there for usually the life of the loan. The closing costs are a little higher. So closing costs would be the appraisal fee, title, escrow, processing, underwriting, there's title reports, there's flood fees, there's a bunch of fees that we can give you a list of, but those would all be considered closing costs. And in addition to closing costs are prepaids, so which would be homeowners insurance and property taxes. So those are amounts that would be above and beyond the minimum contribution required. So the conventional program is you have mortgage insurance when the loan to value is over 80%. But that mortgage insurance can be removed without having to refinance the loan. The interest rate is going to be slightly higher than FHA, but if you can bring in 20%, then you don't have to have mortgage insurance, and your mortgage insurance can be removed if you have to have it. So if you're comparing an FHA to a conventional, and if you can go conventional, conventional's going to be the better way usually to go. So USDA is also 100% financing. It's a little tricky in that the property that you're buying has to be in a rural area, and then your income has to be at a certain amount, which on their website, we can figure out those numbers really fast. So that's why you want to talk to your lender so they can help you figure out if you could be USDA eligible. They want to make sure that your debt to income ratio is very low. Lower than what FHA would approve, lower than what conventional would approve, so super low. The benefit though is that you get 100% financing. So it's a good one to look at.
Hi, I'm Troy Morrow, First Security Bank, manufactured home lending specialist. So the construction loan, what it does if you're purchasing property from the dealer's perspective is once we close on the loan, the dealer is able to order your house from the factory, and once that house is delivered to site, we at that point in time can pay off the retailer for the home. And same thing with your contractors is contractors, once they start working on the process of your site, they want to be paid for work that they've completed, and therefore the construction loans we pay as we go, where it's different than an end loan where nobody gets paid until the entire project is completed. So the steps are obviously application process, get the application done online, gather up all the financials, meet with your dealership on the house that you like, and typically that dealership's going to refer you out to some general contractors, and that contractors are going to come out to site and put bids together for you. So we kind of have an idea of what it's going to cost to develop the property. And then once we have all those numbers, we're able to order what we call an as-built appraisal, which is going to be the value determination of the house, the site work, and the property itself.
So the first thing I'm going to do is find out if they're pre-approved for a loan or a cash buyer, and talk about both those processes and how the process would work. Then we're going to talk about if they have land yet, or if they're going to put one in a park, so the location of where the home's going to go. And if they do have land or a park space, then we talk about what size home, and we look at models together, decide what they like and don't like. We get a factory quote, then we do their paperwork for the purchase agreement, and after that they decide if they want to make any changes once they've closed their loan, if it's a loan, and have their placement permit. That's the big part, is getting that placement permit issued, because we at J&M Homes do not order a home without a placement permit. So once we have the placement permit and funding, whether it's half down as a cash buyer or the loan closed, then we can order the home. And then once the home is built, we arrange to have it delivered, we arrange to have it set, and we arrange to have the interior done once they have all utilities up and functioning. So we do have a closing packet that we go through with the customer and they sign. That gives them all this information in writing so that they know what to expect.
The appraisal takes just a couple weeks, and then when the appraisal comes back, we get the loan documents drawn, and then you're now the homeowner. And at that point, all of the work can start. So your site prep contractor could start doing their work. We can fund the manufactured home. During construction period has an interest-only payment. It turns into a principal and interest payment after that. And that's after your work's all done. And any unused funds from your construction budget would ultimately be a principal reduction in one way or another. Your loan just rolls into your fixed rate product. And then after that, you're just having your regular principal and interest payments, and you are welcome to refinance your mortgage at any time, pay it off. It's just a regular mortgage at that point.
Hope this was informative to you. My name is Troy Morrow, First Security Bank.
Thank you so much for joining me, and I look forward to answering any questions that you might have in the future.
You can visit omha.com for more resources.